Lower Rosha here. Let's get right to it. The Asian session just closed and it's sending us a pretty mixed signal. You've got the main Korean index up, but the domestic market is actually down. So before the US bell rings, let's check the data and map out what this divergence might mean for us. And here's that divergence right on the chart. Take a look. The KOSPI, which is where you find Korea's biggest companies, it barely moved, just nudged up a bit. But the KOSDAQ, which is more focused on the smaller domestic companies, dropped over a full %. Right away, that tells you the buying wasn't broad at all. It was laser focused.
So, this leads us to the big question for the US session, right? Is the split we're seeing in Asia a real signal for what's coming? Or, and this is important, given that we're in a low volume holiday period, could this just be a bull trap set up to catch people on the wrong foot?
To figure that out, we have to follow the money. And what we find is that the thing driving this whole divergence was a huge, concentrated bet made by foreign investors. And get this, they weren't really trading the Korean economy. They were trading US policy, and they were just using the Korean market as the vehicle to do it. The scale here is pretty staggering, a net buy of over 1 trillion Korean won. But what's really key is where it went. This capital wasn't just sprinkled across the market. No, it was funneled into a very select few large-cap stocks. That kind of concentration points to a really high-conviction thesis from whoever was placing these bets. This brings us to a market dynamic I've been tracking. I call it policy mirroring. It's this interesting phenomenon where assets in a key supply chain nation, like South Korea, can actually react more strongly to a U.S. policy shift than U.S. assets themselves. And what we just saw in Seoul, it looks like a textbook example of this in action. So let's break down the first proxy they used, AI hardware. It's pretty straightforward. After we saw those strong earnings from Micron over in the US, foreign capital just poured into Samsung and SK Hynix. The logic is crystal clear, right? They're using these Korean memory chip giants as a direct, liquid way to bet that the whole AI data center and hardware boom is going to keep running hot. Now, the second proxy we saw was a bit different. It's in the naval supply chain. We saw this big surge in stocks like Hanwha Ocean, and what that suggests is that the market is starting to price in a solution to the U.S. Navy's well-known capacity problems. This is more than just an order book. It's a fundamental re-rating of Korea, not just as a manufacturer, but as a strategic security partner for the United States. Okay, so let's take all that analysis and turn it into a map for what's ahead. Based on the money flow we just tracked in Asia, there are really two clear paths the U.S. session could take. Remember, this isn't about predicting the future, it's about being prepared for either outcome. So here are the two scenarios. Scenario A, the bull case. If NASDAQ futures can hold above that 25,500 level on a closing basis, then the argument for a year-end rally holds. On the other hand, scenario B, the bear case. If the U.S. 10-year Treasury yield pushes up past 4.2%, or if the NASDAQ breaks below 25,400 on heavy volume, then today's move in Korea was very likely a bull trap. All right, let's put this all together into an actionable plan. Think of this as your pre-market cheat sheet, with all the key levels and the specific tickers you'll want to keep an eye on right at the US Open. Here's the focus list for tonight. For that AI hardware story, we're watching Micron and NVDA, obviously, and for the naval supply chain proxy, we'll monitor the big US defense contractors, General Dynamics and Huntington Ingalls. These are the direct US counterparts to the story that just played out in Korea. In this table right here, it lays out the specific trading zones. Now, to be very clear, these are not buy or sell signals. These are simply the key levels to watch. For Micron, for NVIDIA, and for General Dynamics, you have your bullish trigger and your bearish trigger. But the most important column here is the last one, the confirmation signal. You need to watch for a spike in volume to tell you if a break of these levels is for real. So, the data out of Asia has given us a map. We have the possible scenarios and the key levels to monitor. Now, we just have to watch and see if the US session confirms the narrative. Always remember, trade what you see, not what you think. I am Lo Rasha.